Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, this is an earnings special edition. Our focus is on Mahindra Holidays and Resorts, which has declared its Q4 results as of 26th of April 2024. And here the company has reported the top line, which has increased by 12.5%. The profit has jumped substantially by almost 45.9% on a year-on-year basis as well. As for the stock price and its performance, you do know that Mahindra Holidays Resorts has delivered an 8% return in the last 1 week, and over the year-to-date basis, it's up by 12.5%. To discuss and to decode the earnings for this quarter and the outlook going forward, now I'm joined by the top management of the company. Mr. Kavinder Singh joins in, the MD and the CEO of Mahindra Holidays and Resorts. A warm welcome to you, sir, on Business Today Television. Good to have you with us. Good set of numbers coming in. Before I come to the earnings specific questions and to ask you, what have been the key contributing factors, I just wanted to get an overall sense as to how the sentiment is in the hospitality industry. Everybody's talking about a tourism boom. There is a clear focus from the government as well to start developing spiritual, tourism sites as well. Are you enjoying the joyride as of now? Where do you see things headed?
All right. The big picture in tourism and hospitality is very, very bright. Uh, and I must say there are enablers that have helped this kind of momentum that you're seeing. And it's good to see those enablers. For example, if you see the number of airports that have come up in the last 10 years are about 75. Equal number of airports will come in the next 5 to 6 years. So the momentum in travel is also being fueled by very good air connectivity. We always had good rail connectivity, but now air connectivity is also improving. The highways, the focus on highways and infrastructure is also helping the tourism boom. Obviously, post COVID, people want to go out for shorter holidays. That's a mega trend that we are seeing. They go on driving holidays and they want to go more often. And they want to go with families and friends. So overall level, the picture is good. Even the ARRs, the recent ARRs that have come are very encouraging. At about 8,900 occupancies, we never had it so good, about 70% plus at the industry level. And you can see every day there is some hospitality player who's announcing plans of increasing the number of rooms that or the resorts or the hotels that they will put up. So at an overall level, yes, there are tailwinds, and we believe that this will last for a very long time because we have aspirational middle class who wants to holiday regularly, more frequently.
Okay, got that. So the picture looks absolutely positive at this point in time. Now coming to the earnings, what led to the sharp jump in the bottom line, sir? And more importantly, will it be sustainable? How do you see the profit growth in FY25?
So I would like to just clarify that our profit after tax grew by 25% if you exclude one-offs. I always believe in sharing the numbers excluding one-offs. If you look at our press release, we have clearly removed movements that happen as positive movements that happen as a result of the forex. Because we have some euro loan exposure, so sometimes things go positive there, sometimes they go negative. It's good to see numbers without these movements. Also, we got an interest income on the income tax refund that we got. So we got the income tax refund with interest. Now that also boosted the income and therefore the profit. So I've excluded all of that when I say that our profit after tax grew by about 25%, which is a very healthy number for the quarter. And for the full year, if I were to exclude everything, at a 16% growth in profit after tax. Not only that, the growth is happening, but our profit before tax margin stands at a very healthy 15% for the full year, and which is also up by about 60 basis points. So our margins are expanding, our profits have grown, our income has grown at a very healthy level in the quarter at about 14%. So if you really look at the matrices which are related to the operational area, for example, member additions were very healthy at about 12.5% growth in the quarter, and for the full year at about 15%. And we had a milestone achievement of about 20,000 member additions in the full year. So if you look at occupancies, quarter four turned out to be again a great quarter, 87% occupancy compared to 85% last year. This is on an expanded inventory base, 85% for the full year. And also one metric which does not get sort of noticed in our earnings call is that we also have grown our cash to about 1,383 crores. And this is cash lying on our books. And also our deferred revenue grew by about 269 crores to about 5,595 crores. So all round operational metrics are robust. Income, EBITDA, PBT, PAT, the highest ever. Margins are healthy. So it's a very, very strong all-round performance. That is something that we noticed not only in quarter four, but for the full financial year.
Okay, got that. So operationally, things look very, very positive, and the outlook also you've said that continues to be sustainable at this point in time. What about the new resorts that you opened in Q4? Where does the count really stand at in terms of the rooms as well? What is the total count right now, and what is your vision now, sir?
So the total count for the room for us is right now 5,327 rooms. We added about 387 rooms in this year. And if I were to look at our total count that we are aiming by 2030, that's about 10,000 rooms. So it is basically doubling from 5,000 to 10,000. And the good news is that we will need a capital expenditure of about 4,500 crores to achieve that. And we do not have to borrow because we are sitting on about 1,383 crores of cash on our books as we speak. So the momentum in terms of inventory additions is already significant and also going to be even more significant as we keep moving forward. Our public-private participation plans are moving at a very healthy pace, and as a result of which you have seen that not only we did a Jhanjeli resort, which is in Mandi district in Himachal, operational last financial year, the previous financial year, FY23. In FY24, MTDC Harihareshwar concession agreement has been signed. 2 land pieces, parcels have been allocated to us by the Odisha government, as well as now with Uttarakhand government, we have identified 4 land parcels, which we are working with Uttarakhand government. And we also signed an MOU with Tamil Nadu government for significant investment there. So the momentum will come from the fact that we are very, very confident about the tourism potential, the fact that people want to holiday with families and extended families and friends, and therefore the supply of high quality resorts with immersive experiences that the brand Club Mahindra provides would be very, very critical in this journey ahead. And that is what gives us the confidence that we can sustain the momentum ahead.
Okay. So also, like I just mentioned briefly in the opening comments, that the government's focus on developing spiritual areas for tourism is very high at this point in time. Are you looking at as a lucrative opportunity for you to start looking at such places for the next upcoming capacity expansion? You already mentioned the cash lying on your books, so there is a comfortable cash and you can actually go ahead and develop and probably acquire more resorts in such places. What is the plan on that front, sir?
So if I were to look at the opportunity that is there in India, it's massive. There are destinations to be explored, and spiritual destinations is a subset of that, as I see it. We are definitely looking at the upcoming spiritual destinations, popular spiritual destinations, and also family holiday destinations, and more importantly, what kind of activities people want to do when they come to our resort. Please remember that in our business, our income, particularly the resort income, comes from the food and beverage spends and activities. It's very important that we engage with our members and create experiences, not just the sightseeing experiences, but also in resort experiences. So while we will continue to drive our presence in spiritual destinations, but we will also continue to create new destinations. For example, Jhanjeli is a new destination we ended up creating. Harihareshwar is going to be another new destination. We are credited with creating Munnar as a destination. We are credited with creating Coorg as a destination. Kumbhalgarh is a destination that we created. So there are many. So India is still unexplored, if I may say, to say the least.
Okay, India is still unexplored, and there is a lot of opportunity over there, and which you will be, of course, exploring as well. So, do talk to me about the average revenue per room, how that is really improved in Q4, and where does that look headed from here, sir?
So in our business model, since when membership plans are sold, we do not charge for the room at all. We have a fixed annual fee, which of course is indexed to the inflation, and that's again a smaller amount. So for us, uh, the core metric is how many people are utilizing our resort. So we had a very good occupancy of 85%. We would like to take it higher. More families come, more they spend in the resort in the area of food and beverage, as well as the activities and experiences that we create. So for us, those matrices are very important, unlike a traditional hospitality metric, which is ADR or RevPAR. We do not even look at these matrices for us. For us, what is the membership addition growth? How much is the cash we are generating? How much is the deferred revenue we are adding? How much is the resort revenue we added? How many more rooms we can add? For us, these are the matrices that we focus on. And what is the upgrades we are doing? Because upgrades are also, a cost-effective way of increasing your revenue. And by the way, our cost of acquisition is significantly coming down because of our focus on referrals and digital in terms of acquisition of fresh memberships.
Understood, sir. And in fact, this is what I was coming to. Your value for membership sales increased by 18% year on year. How is that poised to go ahead? What were the upgrades that you saw in Q4, and how do you see that picture growing too?
So you're right. The membership sales value grew by 18% year on year basis, and for the full year at about 16%, which includes upgrades. And upgrades also in a way are giving you an affirmation that your proposition, the customer value proposition, is very robust. And as we move forward, and by the way, these numbers help us to create deferred revenue because we cannot recognize the full revenue of the membership sales because it's a longer tenure membership that we sell. So the entire revenue is recognized over the full tenure. So as we see ahead, obviously we are planning higher member additions. Obviously, the sales value should go up, deferred revenue should go up, cash should go up, and the fact that we are building resorts at a far more aggressive pace than what we have ever done before. We are now clocking roughly 400 level. We used to be a few years ago about 200 odd rooms, prior to that even lesser. So our member to room ratio is very robust at 56. So broadly, our aim is to accelerate inventory, and as a result of it, generate significant amount of cash. Already we have 1,400 crores of cash. Invest the cash into building newer resorts, and thereby again add members. So our business is a very robust business model, which is in a way self-sustaining if we continue to focus on one area only, which is the member experience. If the member experience is good, this is a business model like a flywheel. It just keeps generating cash profits and also ensuring that the network grows of the resorts. We currently have a network of more than 100 resorts where members can go and holiday.
Absolutely, sir. And that's been your clear focus, and that's been reflecting in the earnings as well. So, all the very best to you for the upcoming quarters for even better and higher sales and more member additions and more resorts coming up. All the very best to you for that. Many thanks for sparing your time with us on Business Today to help our viewers really understand how the company is really growing at this point in time and what is the vision going forward. Truly appreciate your time with us, sir.
Thank you so much.
All right, viewers, with that, we wrap up this special conversation with Mahindra Holidays and Resorts. Good set of earnings this time around, although the PAT was definitely, given a bump up with that one-offs and exceptionals as well. But continuing from here, the operationals that the company is confident of sustaining at this point in time with good cash flow generation and as well cash flow lying in their books as well. So there is a positive commentary as far as growing the number of rooms and resorts is concerned, and for capacity expansion, where the company will not have to really borrow but rely on internal accruals for more expansion from here on. The key is definitely the doubling of the room count from about 5,000 now to 10,000 by 2030 is the aim that the company has as of now. With that, we wrap up, but do stay tuned on to Business Today for a whole lot more conversation, exciting interactions around Q4 earnings for helping you better understand the companies that are trending on stock markets.